Hello everyone, welcome to this talk about equity management, cap tables and UBOs. My name is Fabrice and this is the QR code that you can scan for your questions. I also made it an easy URL to enter if you prefer that. And you'll have the chance to scan this QR code during Q&A as well. So in Odoo 19 we have introduced a new app called Equity, and this presentation is going to cover everything about this new app, and it's essentially in two parts. The first part is about cap tables, so equity ownership in companies, the management of shareholder registers, and the second part will be about UBOs, ultimate beneficial owners. First, let's dive into cap tables. So the new app that we have created is called Equity, and you can find it on the start page of Odoo 19 with that nice little icon. And cap tables is the fact of keeping track of the various transactions in the context of ownership of a company. Cap tables is short for capitalization table. Traditionally, shareholder registers are maintained on paper, but with the digitalization of the world, we see more and more opportunities to transform a shareholder register into a digital form. So the best way to understand the cap table features in Odoo is to first start with understanding what a transaction is. So there are various components of a transaction, and we're going to go over these various terms. First, we will talk in terms of shares or options. A share is a piece of ownership of the company, and an option is the promise to be able to buy a share at a certain price later on. Typically, if the value of the company grows and that you have an option to buy a share for small amount of money, it will be very beneficial for you to exercise that option into a share later on at that smaller amount of money. In Odoo, when both a share or an option could be utilized, we will call this a security. So from a terminology standpoint, we'll use the word security when it could apply to both a share or an option. There are four types of transactions: issuance, transfer, exercise, or cancellation. An issuance is when a company emits new shares or new options. A transfer is when share options are transferred from party A to party B. So typically a sale, you will have a transfer of a share from party A to party B. An exercise is when you exercise an option. It only makes sense to exercise options, you don't exercise shares. So that transaction will only work with options. And exercising an option means buying the share at the promised amount before the expiration of the option. And finally, a cancellation is essentially a destruction. So you can cancel a share or destroy a share, or you can also cancel an option, typically after it has been expired and that it's not valid anymore. The next concept has to do with seller and buyer. Obviously, when you transfer a share, it's going to be a seller selling its shares to a buyer. It's fairly obvious. But there's only two parties in the case of a transfer. For all three other types of transactions, like issuance, exercise, and cancellations, there's not two parties. There's only one person or one entity involved. And in that case, we'll call that entity a subscriber. So for example, if someone exercises options, we'll say that this person is a subscriber. Essentially, the subscriber is the recipient of the transaction at hand. Next, we'll talk about classes. And a class is a different type of share or different type of option. There are different classes. They have different parameters. we can specify how many voting rights a certain class provides, or if a class provides dividend payouts rights. In our example that we will go through later, Class A is more powerful than Class B because it has double the voting rights. So keep that in mind. The next concept is going to be about price. The price is fairly obvious when it comes to, let's say, a share transfer, because it's going to be the price at which a share is sold by the seller to the buyer. But there is another concept that has to do with price, or that has the word price in it. It's the strike price. And the strike price is not the same thing as a price. The strike price is the price that was promised in the case of an option for the amount at which the share can be bought later on. Next concept is the valuation. And the valuation, it makes sense in the case of the valuation of a company. So we'll talk about valuation of company in Odoo equity. And finally, the last concept has to do with the ownership. And the ownership can be expressed as non-diluted or fully diluted. Non-diluted would mean that we consider only the shares of the cap table to know the ownership of someone. So, whereas in fully diluted, we will also consider both the shares and the options. So someone could have 10% of a company non-diluted, but only 7% of that company fully diluted, because we would be considering all the other holders who have options. Okay, those are all the components of a transaction in Odoo equity. And the best way to understand how the cap tables work is to go through a story. And you know I like stories. So we'll go through a scenario in 6 acts. And for every act, for every part of the story, we're going to enter it in Odoo and see the result. Okay? So the story starts like this. Alice is the founder of Gemini Furniture. In January, the company issues her 1,000 Class A shares at the incorporation for a total of $50,000. And due to this transaction, this first emission of shares, the company is then valued at $50,000. So let's enter this in Odoo. It's a share issuance for 1,000 Class A shares at 50. I go to the equity app, and I will create a transaction for Gemini, which is her company. It's in January. It's an issuance of 1,000 Class A shares at 50 a share, and that's for Alice. And we're good for that transaction, and it created a new valuation due to this transaction. So that valuation is there, it's all good. So this first transaction has been entered, and when I refresh my dashboard of my equity, I see that Gemini Furniture has appeared as a company that has now transactions and that we can look into, and this is what the cap table of Gemini Furniture looks like at this time, after one transaction. So we see 1,000 Class A shares for Alice. Next, in February, in anticipation of hiring C-level managers, Alice creates an option pool 1 with 200 options with a strike price of $50 per option. And in the meantime, the company has grown, and an audit has evaluated the company at $120,000. So this is going to be an options issuance. The company is going to emit those options of 200 options in the option pool 1 at a $50 strike price. Let's do that. We create a transaction for Gemini in February. It was 200 option pool 1 at a $50 strike price. And there is no subscriber because we're going to park those options in the option pool because we are going to hire those C-level people later on. So we would just want to emit the options and create an option pool for those. So we're good for the transaction. And there's a new valuation with this, which is an $120,000 valuation. Pool 1, option pool 1. Okay. Next. In March, she hires a CFO, Billy, and gives him 50 options from the pool for a total of $5,000. So she found her C-level manager, and she wants to grant him 50 options from the pool. So it's going to be a transfer of options from the option pool 1 for $100. 50 options for $100. Let's do it. New transaction. Transfer. Oh, and sorry, I forgot to show you what the cap table looks like right now. It looks like this. So we have Alice who has her 1,000 Class A shares, and we have 200 from the option pool that are unassigned because they are in option pool 1 here. So we're going to transfer those 50 options from the option pool 1. It's a transfer in March. It comes from the option pool and it's for 100 and it goes to Billy. And there was no change in the valuation of the company in that step, so we stay at 120,000. Okay, very good, for 5,000. Next, in April, Alice raises money with a VC firm, Lights Up, in exchange for 300 newly emitted Class B shares for a total of 39,900. And this transaction brings the company, because the company has been growing and working hard in the meantime, brings the valuation of this company to $200,000. So let's do it. It's a share issuance because she's giving shares to this VC firm. 300 Class B shares for 133. In April. And it lights up. And it's an issuance. So what does the cap table look like at this point? It looks like this. Alice has her 1,000 Class A. There is now only 150 left in our option pool 1 because we transferred 50 from the original 200 to Billy, who now has those 50 in options coming from the option pool 1. And Lights Up, the VC firm, has received the 300 Class B shares. Now, let's pause here for a second. We see in this cap table that we have at this point a total of 1,500 securities that have been emitted. And we see the ownership. This is a non-diluted ownership. So Alice at this point has 76.92% of the company, and Lights Up has 23.08%, for a total of 100%, of course. Billy has 0 because he only has options. So he has no non-diluted ownership in the company at this point. And we see the voting rights here. Now, Alice has a lot of voting rights because she has Class A shares. And remember how Class A's are more powerful than Class Bs. So it's not like she has 76% of voting rights. She has more than that. And the VC firm, Lights Up, has less voting rights than the 23% of ownership that they have because they have Class B shares. Now we also see the dividend payouts that those classes are providing to each of these parties. And we also have the information in fully diluted. And in fully diluted, Billy has some fully diluted ownership to the company. And finally, we see the spread in the valuation. At this point, again, the company is worth 120,000. Let's continue. Next, in May, Billy exercises all his 50 options at the strike price of $50 into a Class A share. Now, that's a good deal for Billy because he's going to exercise options. His strike price was $50 from back in the days when the company was worth less and it was given to him. And he's going to buy them for $50 even though they are worth $133 at this point. So let's do that. It's going to be an option exercise of his 50 his 50 options into Class A shares for $50. So let's do it. Oops, my bad. Transaction. It's in May. It's an option exercise. He's exercising his 50 options from the option pool 1, and as you can see, we can see that he has 50 of those. And he's going to exercise all 50 of them into Class A shares. Okay, because that's what the option agreement is allowing him to do. For $50, not $133 like what it's worth today. And it's done. So now, what does the cap table look like when I refresh? Boom, he has 50 Class A shares and no more options from the option pool 1. And now, he has 3.7% of non-diluted ownership in the company. Okay, as well as the voting rights because he has real shares now. Finally, in June, Alice sells 100 of her Class A shares for $133 per share to Lights Up. So still, same valuation. The company is stabilizing at $200,000. If I entered it correctly. Let's verify. Yes. No, sorry, I need to create that last valuation from April. My bad, I forgot that. It was a valuation for 200,000. For Gemini. Okay. Okay. So she sells 100 of her Class A shares. So it's a share transfer of 100 Class A share for 133. Alice. Sorry, Alice. To Lights Up in, was it June? In June of her Class A. So she's gonna give out 100 of her 1,000 classes for 133, if I'm not mistaken. Yes, for a total of 13,300. Okay. What does the cap table look like? So first, in the dashboard, you will see the evolution of the valuation of the various companies. In this case, Gemini has evolved. And when I click on it, I see the cap table, the latest and final situation of the cap table, where Alice owns now 900, Billy the 50 that he exercised, and lights up the 100 Class A that they just bought from Alice, and the 300 Class B when they became an incoming VC. And again, we see the ownership non-diluted, the voting rights, the dividend payouts, and the fully diluted ownership, with the valuation, the breakdown of the valuation per party. Okay, so at this point, it's the end of our little story, and I can also click and drill down on any cell in here in this cap table to see the transactions that explain this number. For example, if I click on the 900 of Alice, it's what she got at first, the 1,000 emitted by the company at the incorporation, minus the 100 that were sold to the VC firm. What I can do also is I can send an email. Let's send an email to the VC firm to inform them of the latest transaction that took place. When I do that, they receive an email, and when they click on the email, they get a link to the portal. When they click on that portal, they will see what their situation is for this company. So they will see a graph with the total value of the company and how it has evolved, as well as their value, their non-diluted ownership of the company. To the left, we see that the valuation of the company is 200,000, and that their ownership of the company is 29% or 59.26 K of the dollars of the company, as well as their voting right. You might wonder how come it went down a little bit here. It's because they got diluted by the fact that there were shares emitted on the side. And here at the bottom, they will see a recap of the different transactions that they were involved in. So in this case, the issuance of Class B when they became a VC in April, and the sale of Class A shares from Alice to them in June. And so they see their total number of securities and the transaction price at the time. Very good. So that's for our first part. Second part of the presentation has to do with ultimate beneficial owners. What is a UBO? It is a natural individual, so it's a person, not a company or an entity, who ultimately own or control a company. They typically do that with ownership, typically more than 25% of shares, directly or indirectly, so it could be through another company, or it could be controlled by other means, like if you have statutes or shareholder agreements or voting agreements, or it could be senior management position, like chairman of the board, CEO, and these kinds of things. And this is something that companies need to report to their government in many countries, certainly in the majority of Europe, in the context of anti-money laundering and KYC obligations. So what we saw with the cap table is all the transactions and having all the information of the ownership between Gemini and Furniture and its shareholder or the people in the company, right? Lights Up being one VC firm that also has ownership in that company. But so we know everything about Gemini because it's our company. What we don't know is we don't know everything about Lights Up. And we don't know anything about the owners of Lights Up. And when you talk about UBOs, you need to drill down all the way down to the ultimate beneficial owner. It means the person who's going to be behind the company, who's behind the company, who's behind the company of the company that owns your company. And companies don't know that, and their accounting firms certainly don't even either know that. And imagine when you're an accounting firm, if you have 100 of customers, that's going to be a lot of requests and questions and emails and back and forth to do in order to gather the UBO information. So the UBO feature in Odoo helps gather the information for the purpose of compliance and for the purpose of reporting to the government information. So let me show you how it works. I find a company, let's say this one, and I can request a UBO form. I can send them an email like this, and they will get a link on the portal. When they will fill in that link, they can specify the ultimate beneficial owner. Save this. With all the information that is required by authorities. ID number or birth date, is it a politically exposed person, what is the start date of the control of this person in the company, and how does this person have control. It could typically be ownership 25% plus like we discussed, in which case we will have ownership percentage and voting rights requirements, or it could be the control by other means that I mentioned, or it could be an executive officer, in which case we need to know what kind of role they have. And this is for companies, but you also have other categories of control for NGOs. So let's specify that this person is an owner and that they have 30% on both. I could also add a supporting document, and I can add the person. And I can add all this person, at least it's the company that I am sending this email to is going to add all these people, and they will have someone entering this. Yeah. Now it's entered. What does it look like in the back end? When we go find this company, we will have a tab called UBO with all the UBOs and all the information. We'll see all the required fields that the government requires for UBO reporting. And when we click on them, we see all the details of this person in the context of that company, because this person could be a UBO of another company as well. And just like that, you can collect all the information of the UBO of the various sub-entities of the companies you manage, or of your customers if you're an accounting firm, and gather this information, collect the PDF in the chatter that you have to keep for sometimes up to 10 years, and have access to all the UBOs in the equity, just like that. That also allows you to have to manage your activities and get reminders to make sure you report those things on a yearly basis. And that's it for this presentation. Thank you very much.
All right, thank you very much everyone for attending. Thank you Fabrice for the lovely presentation. I see currently in the pad we don't have any questions, unfortunately as well due to timing. Is there anywhere the people can contact you afterwards, should there be any questions?
Yes, I will be on the accounting booth afterwards.
All right, perfect. So in which hall is that exactly?
It's here in the hall 7.
All right, everyone, hall 7, you can go visit Fabrice afterwards should you have any questions. Thank you very much.
Thank you.